Okay, AU Small Finance Bank, a bank that is quite media shy, doesn't really talk to us too often. One of the better performing banks in recent times, especially on a smaller scale. Let's walk you through their Q2 numbers and help you understand why they have been nominated as the ET Now Earnings Dhamaka candidate for Q2 FY21 banking results. Now, firstly, it's been a blowout quarter by them. The focus remains on low-cost deposits and granular deposits. Provisions have more than halved QoQ. Asset quality remains stable. Profitability has 2x'd, and NII has grown at 25% despite a very challenging environment for credit growth. Now, particulars on each front. Profitability 322 crore versus 172 crore YoY. So nearly a 2x jump there. NII 560 versus 451 YoY. Provisions 57 versus 181 Q on Q. So this just goes to show how little stress AU Bank probably perceives in the loan book, right? Because what we've just seen with banks like HDFC, Axis Bank, provisions have remained very well elevated. In fact, pretty much on the same level as last quarter. So last quarter, Axis was 4,400. This quarter, they're 4,500. HDFC also, I believe it was a couple hundred crore price band, but basically provisions have not really tapered off too significantly. At Kotak Bank, which mind you had the most positive reaction post numbers, we saw a 10% spike the following day. There, what did we see? We saw that provisions came from 968 crore to 368 crore. Credit didn't grow that much. Asset quality was stable. So AU in a sense reminds you of that result where provisions have come down significantly, and that perhaps goes to show that the bank's management is quite bullish on the prospects and particularly on the asset quality and doesn't really foresee the need to provide heavily right now. A prudent approach could be you go ahead, take big provisions right now, and in the event that loans actually don't go bad, you have write-backs later on, which are also appreciated by the street. But AU doesn't want to do that. They're like, we're fine with booking our profit right now because we don't think that we have that kind of asset quality issue in our loan book. Now, the gross NPAs are 1.54% versus 1.69% Q on Q. On absolute terms, they're around 423 crore versus last quarter's 447 crore. Net NPAs are 0.45% versus 0.62%. So the CASA has obviously done well. Both your current accounts and your savings accounts deposits are growing very well. So CASA is showing a nice uptick. Barring that, it's one of the few banks which continues to remain focused in rural tier 2, tier 3 smaller cities. And let's remind ourselves that those regions seem to be less impacted by the COVID slowdown than our metros and tier 1. So keep your eye out for this one. Stock pretty flat in trade, but we are having a tough day in the markets. Decent numbers from them this quarter.